The headline: Taiwan dollar surges to 5% to US dollar amid Asian currency rally. Good day. A wave of optimism is sweeping through Asian financial markets as regional currencies soared today, lifted by growing hopes of a breakthrough in the U.S. China trade dispute and fresh signals of potential tariff deals from the Trump administration. Leading the rally was Taiwan's currency, which saw a stunning intraday surge of 5%, its sharpest jump in over 3 decades. The move comes as Taiwanese exporters scramble to convert their US dollar holdings, betting that the Taiwan dollar will keep rising. So far this year, the Taiwan dollar has climbed over 10%, fueling speculation that authorities may be letting the currency appreciate to smooth negotiations with the US government. Other Asian currencies followed suit. Malaysia's ringgit and South Korea's won each rose 1.3%, while Singapore's dollar strengthened to its highest level since September last year. The Japanese yen and Australian dollar also gained ground. The regional rally comes amid signs that U.S. President Donald Trump is shifting from confrontation to negotiation. Trump hinted that his team is in active talks with Chinese officials and that new bilateral trade agreements could be announced as early as this week. According to Joey Chu, head of Asia FX research at HSBC, markets appear to be moving from tariff escalation to negotiation. She notes that the recent flows aren't typical asset reallocation but more about foreign exchange hedging, especially important for export-driven Asian economies. In Taipei, trading volume between the US and Taiwan dollars surged to levels not seen since the 2008 global financial crisis. Local banks, including Cathay United, were flooded with transactions, forcing them to introduce virtual queues on their apps to manage the pressure. Still, Taiwan's central bank has so far held back from heavy market intervention, even as the local currency strengthens. BNP Paribas, Zhu Wang noted that while the central bank is usually a market buyer to stabilize the currency, its current low-profile stance is sparking speculation that currency movement could be part of the ongoing trade strategy. One senior Taiwanese financial executive, speaking anonymously, said, "Hot money is coming into Taiwan, and the central bank is allowing it." Meanwhile, some analysts believe Taiwan's currency appreciation is fueling similar movements across Asia, as nations quietly align with U.S. trade interests. However, Taiwan's central bank denied receiving any request from Washington to let the currency rise and reaffirmed its policy to maintain exchange rate stability. Elsewhere in the region, the Hong Kong Monetary Authority stepped in to buy a record volume of US dollars, defending its currency peg as the greenback showed further signs of weakening. On Wall Street, the bearish mood toward the dollar deepened despite recent upbeat jobs data. Analysts at Goldman Sachs called the jobs report a look at what might have been, rather than a preview of what's to come. Morgan Stanley is now forecasting more pain for the greenback. In a note to clients, strategist David Adams said the firm remains bearish on the US dollar, while favoring the euro and the yen in the weeks ahead. With the US signaling a softer tone and Asian economies preparing for renewed engagement, all eyes are now on the next move in Washington and Beijing. For investors, traders, and policymakers alike, this may be the calm before the next currency storm. This is AR-WorldNews.com, and this is your global finance update. Until our next episode, thank you for watching and supporting our channel. Take care, and be safe.